The government has made billions from selling state assets, so the chair of Meridian Energy thinks they should carve more off.
I think arguably there are other Crown-owned commercial assets that could be sold in a similar way, even potentially, forgetting the attractiveness or not from an investor point of view. TVNZ, the Crown can use those funds elsewhere. To my mind, that's all possible.
It's Friday the 16th of November, and you're watching Markets with Madison. It's been 20 years since the power company Meridian Energy listed on the New Zealand Stock Exchange, and the government sold a 49% stake to investors. The mixed ownership model is controversial, but has been a success, both for investors and the government's books. So should this new government look to sell more?
Today we can officially announce that New Zealand Steel has cracked the code.
Genesis will be the last state-owned enterprise to be floated by the national-led government.
It's an idea that dates back as far as 1988, when the then Labour government sold New Zealand Steel to Equity Corp for $327 million. It was picked up again by John Key in 2012 as a way to rein in government spending and debt amid high inflation and interest rates. Once elected, his government floated and sold 49% of their stake in Mighty River Power, now called Mercury, Meridian Energy and Genesis to the New Zealand Stock Exchange. It also sold down its stake in Air New Zealand, which was already listed at the time, reducing it from 73% to about 53%. Since listing, the valuation of the power companies have increased by varying amounts. Mercury has been the best for the market, up by 144%. Meridian's up by 103%, and Genesis by just 30%. Collectively, they've paid billions in dividends to investors and the government over that time. There's been no real major asset sales since, other than the partial listing of Napier Port by its council in 2019. Or Auckland Council recently selling a small slice of its Auckland Airport stake. The last Labour government actually bought state assets, taking back 100% ownership of Kiwibank and retaining its majority stake in Air New Zealand when it raised capital last year. But the chairman of Meridian Energy, Mark Verbiest, says the new government should look to sell more state assets. He says in Meridian's case, it ultimately made them a better commercial operation that's now able to invest in big transitions like renewable energy. Well, Mark, thank you so much for doing this. It's great to see you.
Oh, it's a pleasure.
I want to start with talking about the mixed ownership model as a whole.
Yes.
If you could take your mind, please, for us back to 2011, when this whole idea was first floated by the then national government as a bit of an election move back then. What did you think of it in 2011?
I was a big fan, and in fact, I was one of the Treasury advisors in the background working on, the way the model was to work and so on, in a very minor way, I'd have to say. But no, definitely a big fan. Transparency, the disciplines that a market, the share market, looking at a stock brings to bear. Which means the organisations would likely be more economically efficient, and that's absolutely transpired to be proven. And with the opportunity for New Zealanders and funds to participate.
How much has Meridian paid in dividends, if you know off the top of your head, back to the Crown?
I think it's about to the Crown? Over the period since listing, I believe it's over $4 billion that have been paid to all shareholders. So the Crown stake would be $2.2 billion.
Pretty impressive.
Over that time, 370% shareholder return.
Is that
across
TSR?
That whole period? TSR. So both share price appreciation and dividends, as against the NZX 50. Which has returned 130% over the same period. So the Crown stake has increased as well in value terms.
Obviously, then the numbers tell us that value has clearly been created for both the public market investors and the government as well.
Yeah.
But what about the value that the numbers don't show us? Have you seen value created internally inside Meridian? Does it operate better as an organisation in your view?
Well, I wasn't obviously involved in the internal side of it back in the day, but I had imagined that it would have. When you're subjected to more scrutiny and you've got the likes of share analysts crawling all over you as well as investors, that does a lot to instill real discipline, and you can't hide. It's all out there. So I would say it's made a big difference.
If we do just focus on the numbers, that kind of suggests that there's more value to be created in the public market for a company than holding it in government hands, especially when it comes to things like capital discipline and management discipline and the like. So do you think that they should start selling more government or council-owned assets under this model?
Well, I'm expressing a very personal view here. I think arguably there are other Crown-owned commercial assets that could be sold in a similar way to the combined benefits that have been realised through the current MOMs, particularly the electricity ones.
Can you give me some names of assets that you think would be good ones for the market?
Well, you've got the likes of New Zealand Post, which to a large degree, I did chair Freightways, so obviously it was in competition, but there's actually no reason why the vast majority of that business now couldn't be in at least some private ownership. Even potentially, forgetting the attractiveness or not from an investor point of view, TVNZ and indeed potentially some other SOEs as well. The Crown can use those funds elsewhere. It doesn't mean that if those organisations go out of Crown ownership, the Crown can't divert those funds elsewhere, and I would say that would be, a useful thing to think about.
Do you think that because it would be better for the organisations suggesting that they're possibly poorly managed at the moment, or you just think there would be appetite on the market for them?
Both, absolutely, for sure. I think the other benefit, which we haven't talked about yet, is the fact that, for example, the electricity sector has got to spend about 40 billion by 2030, of which 10 billion roughly has to be spent on new generation to help New Zealand decarbonise. The fact that the majority of that funding is actually going to come from the private sector, I think is a good thing.
I do want to talk to you about that in more detail, but just specifically on these assets, I'm very interested in your view here. Do you think that buying back Kiwibank was a mistake?
I don't have a view on Kiwibank. That's a tricky one, and the economics of banking are difficult. I think the issue for Kiwibank is more about its size versus the form of ownership.
Okay, very interesting. Let's talk about that excitement underway in the electricity sector. And it's not often that there's something exciting underway,
no.
dare I say it, in the utilities. But this big shift to a low carbon economy. I'd love to know the desire for specifically Meridian to spend billions of dollars on this. Obviously, you are government majority owned. Is this something that's being pushed on you by the government with their target?
No.
Or is this something that you're kind of just damned if you don't do because everyone's doing it?
Look, at various levels. Firstly, the fact that New Zealand does need to decarbonise, the planet needs to decarbonise, and we have to get on with it now. So there is a very strong impetus to act now. Secondly, in the case of New Zealand, about 25 to 28% of our carbon emissions in this country come from fuel and process heat and things like that. The smartest and most efficient thing to do is to actually electrify those things. And as a result, you're looking at quite a considerable increase in demand, which means you need to supply more electricity. And we're in the generating business. And in Meridian's case, we're 30% of the market. We see it both as an opportunity and indeed genuinely as a responsibility. You know, we have a big role to play. We want to be one of the leaders in the space, and in fact we think it's important for New Zealand that we are. So it's all hands to the pump. And to your point, it's probably the most exciting time in our lifetimes for a sleepy old industry like energy to be involved in it. It's great, and it's really, no pun intended, it is genuinely energising the team.
If we focus just on paper, more generation obviously means more revenue for an electricity company. As consumers, more share of our wallets are going to go towards electricity, no matter which way you cut it, if we all buy electric vehicles, if that thematic is to be believed. How do you think that's actually going to benefit your revenue going forward? I know this is a long-term trend here, but if you could put a number on it, a percentage increase, what would that look like, and how would dividends to investors benefit?
Well, we're pretty confident, without putting any direct numbers on it, but we're pretty confident that we can maintain a pretty stable dividend flow and continue to invest. In our case, it's about 4.4 billion by 2030. We're thinking 7 new power stations, which, if you think about the New Zealand Electricity Department having developed dams that have lasted 50 plus years, and these are long life assets, building 7 stations, that's just us, in that sort of time frame is pretty quick, and $4 billion worth of investment. Our balance sheet can sustain it. And just to pick up on a point around the cost to consumers of they're going to be consuming more electricity. In fact, the independent studies would suggest that an overall household's energy costs, and I'm including petrol in that, because petrol would disappear from the equation.
That'd be nice at today's prices, wouldn't it?
Well, it would. And so the prognosis is actually a slight decline in an overall household bill, say by 2050. I know it's a long time out, but it's actually all fundable, it's all doable, and part of it, a lot of it's to do with removing carbon from internal combustion engines, and as I say, process heat, the likes of Fonterra and other dairy companies and those sorts of processes, and converting them to electricity as an input.
All of that is kind of yet to be confirmed though, isn't it? And dare I say it, but the return on investment is pretty wishy-washy. I mean, we don't really have any definitive numbers, right? We just think that this is happening in the economy, and the likes of Meridian need to play their part, and it's more of like a responsibility rather than a return on investment. Is that me drawing the wrong conclusion there? It seems a little bit crazy.
Yeah, I would say it is. Some might say, but interestingly, the capital markets are not telling us that we're investing slightly ahead of the curve, that demand hasn't increased that much. But it will increase very quickly. Some of it is chicken and egg. The uptake in EVs are affected by people going, well, where am I going to charge my vehicle, and how long is it going to take? And are there enough chargers in the country? And there aren't at the moment. So it is a real chicken and egg. I know for myself, we have an EV. We live in the South Island. We think very seriously about our journey and where we're going to charge the thing, but that's going to change very quickly. Ourselves at Meridian and other companies, and even the incoming government, or at least the National Party, has suggested they're going to pump a significant amount of money into a charging network across New Zealand, similar to the ultra-fast broadband idea that John Key's government had and turned out to be very successful. That's great, and when that happens, you will really start seeing demand take off.
I was going to ask what you drive. Do you mind telling me?
We've got an EV, an Audi e-tron. Yeah, we've had it for 4 years actually. So
Great.
We're starting to think about, our next one.
How much have you saved on your petrol bill? Can you put in the numbers?
Oh, massive amount. So in my case, I live in Wanaka. I drive to the airport in Queenstown. They actually have free charges there. So that doesn't, cost me a little bit to charge it at home. The vast bulk of the charge is actually at Queenstown Airport. It's costing me hardly anything.
One thing I did want to bring up about this whole investment in renewables is the investment in reliability. And investment in renewables doesn't equal reliability. One could argue that it actually worsens reliability because under this thematic, if we delete Huntly Power Station, then we delete sort of our only backup at the moment. What's your solution to more reliability in the network as we move on this curve?
There is an issue to be solved for the industry, for the country, and in some form or other. We're all aware of that. The industry is doing its damnedest to collaborate and work out the priorities and how we're going to solve this. Personally, I've not been a fan of the Lake Onslow pumped hydro idea. I'm not against pumped hydro per se. Having it in the deep south, more than 10 years to build, being a net consumer of electricity while it's being built. We actually need solutions for the peak hour issues, which is the way that I would describe what you're talking about. And we need those solutions in the North Island. So, we're constructing a solar farm and attached battery at Ruakaka. At Marsden Point, we've got another site planned. There are others looking at doing the same. We think it's a combination of solutions along with what we would call demand response. That's where we're signing commercial customers up to long-term deals on the basis that at peak times we might ask them to switch off or switch down for a period that can be used elsewhere in the system. It's a myriad of solutions like that we think are going to make a significant difference.
Yeah, I'm interested in that last one. Who do you think should be asked to turn their lights off, and how much should the government or power companies pay them to do so?
Well, the market ends up paying them effectively. So, that is part of the economics of the Southern Green Hydrogen project that we're looking at, that at peak times we might ask them to switch off. Well, we've shown the development partners, if this goes ahead, that when we do ask them to switch down, that is at periods when the wholesale market prices are elevated. They can sell that electricity at elevated prices, and that helps actually the project economics.
What's your thoughts on nuclear energy?
I'm sure nuclear energy is a valid solution for some parts of the world where they have massive, massive scale. For a country of the size of New Zealand, it's almost like you could get away with one station and that would be enough, more than enough for all of our electricity. It doesn't seem to make a lot of sense, and certainly wouldn't from a risk point of view, because if something happened to that you don't have a lot of redundancy in the system. So I don't think it's a solution for New Zealand. I can see it potentially being part of the solution in Australia, and it certainly is in places like Europe, Germany, for example, where ironically they switched their nuclear off, and so they've got to think about it again.
I want to ask what it's like to lead a company as its chairperson under a mixed ownership model versus just a publicly listed company. You're also the chair of Somerset. You've been the chair of, as you mentioned, Freightways. Spark is in the mix too, also a director of ANZ Bank. What's the main difference between a mixed ownership model and any of those companies?
Not a great deal, and to be fair to all administrations that I've been involved with, they generally don't interfere, or it's not like an SOE where they're potentially prone to being given more direction. We are very much run like a totally market-driven company, and they are a shareholder. The key difference is because of the 51% ownership, they obviously become pretty important when you're thinking about appointment of directors.
And yourself, they have to approve your job and you.
Yeah. And so, there is a bit of discussion around that, and there are certain policies in place to make sure there's no insider trading that goes on at the Crown end, but also that they get no surprises as well.
How does that work? Because that doesn't work.
Well,
because the surprises would typically be inside information. So how do you manage that process?
Well, of course, you'll be aware that all listed companies are subjected to continuous disclosure.
Yes.
And so it rarely arises very rarely arises.
Okay, very interesting. Well, thank you so much for your time, Mark. It's been amazing to chat.
Oh, it's nice to do so. Thanks, Madison.
I'm going to be honest with you. Mark actually got in touch after this interview and told me that he felt he was a bit too free-speaking on the state asset sales topic and asked if I could cut it out. Obviously I didn't, you just heard him say it. He eventually came around. What I said to Mark was that this show is a place where executives, directors and analysts can actually speak freely. Too often are people at the top gagged by what they should and shouldn't say, what will or won't get them cancelled. Investors deserve the truth, and this is where you're going to get it. Now go put your money to work. Thanks for watching Markets with Madison, the New Zealand Herald show for interested investors. If you want to stay up to date with financial markets, click the subscribe button below and you can watch our other episodes here. Stay up to date with all the business news and numbers as they land on nzherald.co.nz.